Welcome everybody and good morning. It is the Saturday morning Viper Trading webinar. If you're here to learn about trading the markets using the Viper tools, you're in the right spot. All communications from Viper Trading Systems are for educational purposes only. Futures and Forex trading does involve risk and there is a risk of loss. Nothing contained in this webinar, other webinars, including the live trading room, are to be construed as investment or trading advice. And of course, everybody in here does know that you do trade at your own sole discretion. All right. Today's topic is trend changes, spotting and trading trend changes. So without further ado, let's get over to screen 1 where I have a crude oil chart. And let's start to talk about trend changes. Where is screen 1? It's over here. Okay. There we go. All right. So make sure we start off all on the same page here. So before we can talk about a trend change, we have to know what a trend is, right? Can't know if something's changing if we aren't clear as to what it is. So any ideas what a trend is? When we say the word trend in trading markets, what is a trend? Any idea? What types of trends do we have? When we say that market is trending, what do we mean? What does that mean? Anybody? Take a look at that market. It seems to be trending. Well, okay, that's cool. What is it? What is a trend? How do you define that? Good. Okay, we got some feedback here. Jim W. Uptrend is higher highs and higher lows. Going up, going down, going sideways. Okay, direction of the price, says Paul. Lower low, says Bob B. Good. So there are two types of trends. Excuse me. The first one is an uptrend. And that is defined by a series of higher highs and higher lows. I think everybody knows that, right? That's one of the most fundamental things in trading to know. And then, of course, we have the opposite of that, which is a downtrend, which is the opposite, lower lows and lower highs. Now, there is a third option, which is what? What is the third option? If it's not going up or going down, what else can markets do? Sideways. Good. So there's several terms for this. Sideways. Some people call it consolidation. And some people call it chop. There's various names for the same type of price action, which is called sideways. Now, just to be clear, this third option here, sideways, is the absence of a trend. Now, you can, when you have changes, you have several changes. You can go from up to sideways. You can go from down to sideways. You can go from up to down and down to up. So those are the options of changes. But in terms of trends, sideways is the absence of a trend, just to be clear. So it is not a trend. Sideways is not a trend. Now, is it possible to have combination of these two things at the same time? In other words, is it possible to be going up and sideways? Is that possible? Is it possible to be going down and sideways? Have you ever seen any of those conditions before? Maybe we should look for some right now. Yeah, right. The only things that I would really say are mutually exclusive would be you can't be going up and down at the same time. Yeah, right. Okay, good. So let's start looking at charts, and let's start with the crude chart here and start looking at various conditions. And then I'm going to start asking. We're going to do some together. We're going to lay the foundation for the basic understanding of trending markets, and we'll talk at a high level on how to trade them. How about here? Let's start with this one right here. How would you characterize this area right here? If you were to put a term, if you were to define this area right here, how would you define it? Of the terms that we have above, we have three terms above here: up, down, and sideways, or some combination thereof. Good. Down to sideways, sideways to down. Now, why do we say that? Well, clearly you can see that there's a red background, so we've broken support. So we believe the trend could be going down. However, let's contrast this with a true downtrend. Let me go very quickly find a downtrend. Of course, I can't find one right now. We'll find one later. Okay, good. Yeah, down to sideways. So in a down to sideways market, we trade it by shorting resistance and, covering at the bottom. So each time it came up here and kissed resistance, that was a short trade. Short trade, short trade, little bit of a short trade that stopped out. Now, let's all get on the same page as to when that changes. This sideways to down condition changes where? Let me show you some spots. I'm going to give you some choices, and let's all see if we can agree on where that is. Let's call this spot A. Let's call this spot B. And let's call this spot C. Okay, where in your opinion has the trend changed? I'll help you out on this one. From sideways to down to up. A is the first choice, this circle right here, this spot, this swing, if you will. Did it change there? Okay, how about B? Did it change here? Is this the definition of where the trend changed? From down to sideways to up. Or C? Is this spot right here where you would say is where it changed? Go ahead, type in a letter. Which one do you think it is, A, B, or C? That you can define that in fact is now a trend change and you're trading the other direction. Ooh, real mix of letters here. We got A's, we got B's, and a ton of C's. Now, there's several ways to look at this issue. And all of them are correct and good. Okay, so that's a kind of a weird way of saying there's really multiple answers here. This is not really a trick question, but from a technical point of view, if you were to say that you needed higher highs and higher lows to define a new trend, then in fact you had that with spot A. Now, why would A be possible? You say, well, Charles, that just poked through the swing. However, we don't have to look at each of these swings in isolation, right? Wasn't there swings that occurred before we got to A? Can any of you see them? How about this one? I didn't show that one, did I? How about this one? How about this one? And we see this is a double bottom, so I'm not going to circle that. That was a double bottom. In fact, technically that was slightly lower. Okay. Could you not make the case? And this is why I did it this way. And this is hopefully you can pick something up from this. That you came up here, you checked. This was technically sort of a lower high. In other words, if the downtrend in fact was going to continue, would not we have hit somewhere in here, maybe perhaps the midband for a lower high? If we let me do it this way. Let me show you. Let me show it to you this way. Let's draw a downtrend line like that. Everybody see that? See the downtrend line? All right. Now, if the downtrend was in fact intact and going to continue to the downside, would not it have hit somewhere in here at this trend line around the midband and broken down to lower lows? Yes? Right? No, it didn't do that. Came right back up to the same swing it hit, put in another higher low, and then put in a higher high. Now, technically speaking, the way this is normally defined is you need at least 3 connection points. You should have at least 3 connection points. Now, by the time we got to point A here, did we have the 3 connection points? Were there at least 3 connection points before we got to A? Yes or no? 1, 2, 3. In fact, A would be number 4. Yes? So, what was the correct answer? And I kind of tricked everybody on that one, didn't I? I just gave you A, B, and C. I didn't point these other ones out, did I? I didn't show this whole trend line stuff, so you could have seen it a little more clearly. Now you see, and I'm not trying to trick anybody here. I'm just trying to say that we don't. A lot of traders do this, and this is very common, and I used to make this mistake years ago, is you try to look at this in isolation. Well, in fact, you can't. These points are connected to here, what's happening in the future, right? And these points here are connecting back to here, what happened in the past. And so it all flows together. So A is the correct answer, right? Now, would it be a legitimate spot to take a long trade here? Yes? Is that a legit long trade, in your opinion? Now seeing this the way you do, is that a long trade right there? What do you think? Right. That B is actually your entry point long, right? See it? Now, this could have been one continuous long trade from, say, a region box here, filling long on the close of this bar right here, and then depending on the tightness and looseness of your stop, you could have had one continuous trade all the way maybe up into here. Or this could have been punctuated into 2 trades where you stopped out and then you re-entered for another scalp trade somewhere in here on a pullback. So it really depends on how you traded. It could have been one continuous trade or, in fact, 2 separate trades long. Now, probably would have scalped maybe something like that. Let's continue on. Okay, we're going to work together on this. We're going to work together. We're going to do a few of these together, and then I'm going to show some of these where it's not so clear, and you're going to have to do a few on your own. So that come Monday morning, when Monday morning comes, you're going to be like, oh, wow, I look at the chart in real time, and you say, oh, I see what's going on. I see, it's a downtrend. Oh, no, look, it's flipping. It's going sideways. Oh, no, look, wait a minute, that's a downtrend. That's an uptrend, sideways to up. All right, are you ready? Now you tell me if you think this is a downtrend. Here we go. We're going to do let's do a series of these together. Okay? I'm going to advance this chart, and you tell me when you think that there is a trend change. Ready? And you can type. We would type in TC for trend change. Ready? Here we go. Okay, I'm going to start it. We're going to come off this uptrend that we just took the trades on. Okay, so let's continue on. Remember, when you think there's a trend change, you're going to type in TC. Oh wait, it's not moving. nobody, nobody was nobody was typing anything in, and I was advancing the chart because the chart is paused. Oh, what an idiot! Sorry, sorry. Okay, can you see? Hey, hold on. Can you see my cursor moving now? Right now, moving. Cursor moving in a circle. Chart moving back and forth. Yes. Okay. Good. All right. Sorry about that. Let's do that again. Oh man, wake up, Charles. Come on. Okay, here we go. Let me blow these bars up a little bit so you can see them better. There we go. Okay, I'm gonna do these. I'm gonna pick up the pace on these, so we're gonna get to a lot more quicker. Okay, I'm gonna stop it right there. All right. So the question is, so I think you're all seeing how we define when a trend has changed. And by the way, I see that a lot of you answered this question. We need 3 connection points, right? We need at least 3 connection points. Sometimes you can do it quickly with 2 if the circumstances are correct. You can't really do it with 1. You can't say there's a trend change with 1 swing point. So where is the 3rd swing point? Where is the 3rd swing point? Let me give you some choices. I'm going to draw some circles. And we're going to call the circles 1, or let's call them A, B, C, and D. Which one of them define the trend change? A, B, C, or D? C. Right. Was that a legitimate short trade in your opinion? Could you have taken a short here? Yes. This was a short trade. Now, that being said, let me throw a wrinkle at you that is something that is hard for some traders to accept, but it is a way that we teach it. There's something called the phantom trade. And the phantom trade is where you are in a trend. In this case, the trend was up here. And you have a deep retracement that comes all the way out to the outermost band. That technically, from our trading perspective, is called a phantom trade. And some traders, instead of shorting this up here, are actually buying and getting long down in here with the belief that that the trend will resume to the upside, which in fact it did. See? After this deep probe situation. But that's not to say that this rollover was not a legitimate short, because it was. This is a legitimate short. So what are we saying? Are we being ambiguous here? No. I consider this area in an uptrend below the midband to be a transitional area that can, in fact, in some cases, in most cases, a lot of cases, be traded both ways. Yeah. I mean, there's different ways to look at markets, okay? Everybody's going to have a slightly different point of view. For consistency's sake, I'm just explaining how to look at this. So, can you make the case that there was a trend change with lower highs and lower lows? Yes, that's true. Could you have shorted this area? Absolutely. And you had a good trade. Legitimate short, no problem. Could you have been looked at this as, well, this is phantom trades down here, Charles. The trend is still up, and you should really be buying these bounces. I would agree. This is a transitional space, and depending on how you look at it and like to trade it, and each instrument's a little bit different. Some like YM or NASDAQ, for instance, get very spiky in here. Okay, this is fairly clean. It's respecting a swing and respecting a midband. It's really easy to see. Other markets, not so much. It might be spiking way up here into here. It might be spiking way down in here to here. And it's very difficult to trade. So that's another thing I want to say, especially for everyone who's new and we have some new people signed up with us. Welcome, welcome to the team. Instrument selection is very critical to your success. Every instrument trades a little bit differently, and you have to find one that suits your trading personality. If you don't mind the spiky behavior that YM gives you and NASI and some of these other markets where it spikes around up, and if you can handle that and trade it and make money, more power to you. The Russell, we'll look at the Russell. The Russell is a little spiky, but it's kind of in between the sleeper ES and what you get with YM, which is super spiky. Now, even if you took this short and you stopped out here, say you took the short, you got a scalper, maybe you had a runner and it stopped out. Was there another spot to re-enter the trade? And could you have let it, the region box, does anybody see a region box set up here that you could have let go either way? Let me help you. How about right here? Don't try to overanalyze this, okay? The price action in trading these markets is a lot more straightforward than most people think. You know, if you try to overanalyze something, you're going to get paralysis by analysis. You know, you got to really just sort of look at the swings and what the market's doing. Yeah, look, right when this came back up after you stopped out of the short, and if you bought the long here as a phantom trade, you would have already been long when you got to the midband, right? But let's say you didn't do that. Let's say you did not take that for whatever reason. There was a pause here at 745 on crude right here that you could have put a region box on. Now, at the time that this formed, you had been coming off an uptrend with deep probes into support. And so you, in all likelihood, at this point, could have let this box go either way at the time it formed. Well, this is an opaque color at this point, William. See it? See the opaque color? So you had red on the sideways to down condition. We had green on the long trades. We had red here where we said we could have taken a short, yes? And then now this is the opaque condition right here, transitional color on the background. At the time this box formed, this is one of those boxes that you could have let it go either way. And in fact, you were filled long right here. Everybody see that? No, not that one. Not that one. This one, the close of this one right here. Any questions? Everybody see that? Yeah, I see a lot. I'm just saying, try to look at this for what it is. It's pretty straightforward. It's not, you know, if you overanalyze it, it's going to make things tougher. But this is how this worked out. And let me show you what the follow-on was here. You can see that it broke up, and that region box turned into be a beautiful long trade. And then, of course, you can see you had another long trade on a retracement here to the midband with these yellow bars right here. This was a secondary entry to the long. If you missed the phantom, you missed this box, you had another chance to get in right here. All right, good. Okay, is everybody clear now on? Wait a minute, hold on. I think everybody missed that. Okay, so let me go back. Some of you traded this as a phantom. You could have already been long from down here. This is the box that we boxed in to let it go either way at 745 on oil. You were filled long on the close of this bar right here. Market came up, stopped out, re-entry at the retrace here, secondary entry long right there, bounce, and then you get follow through the upside and one more trade. Thrust, retrace, thrust. Right. So yeah, if you're new to us, you have heard us say this before, we are retracement traders. So we look for the thrust. In this case, now the trend direction is up. We have retracement into the support area at the midband where we get long again, or we re-enter, or we put our stops under there. We get another thrust up here. Depending on the tightness and looseness of your stops, you could have actually stopped out again and re-entered right there. Now, if markets, in the room sometimes you're going to hear tight stops and loose stops. Let's say if a market's really running, let's say you're in the middle of like a 100-tick move. You know, market's just running like a big dog. Why would we have loose stops? What's the purpose of loose stops in a big trend? Big trend move. Why not just keep them all tight? Why aren't you getting in and out? Just get in, get out, get in, get out, get in, get out. Things running, 200 ticks. You give it some wiggle room, right? In some protracted long moves, and I'll see if I can find a couple examples. You can go with looser stops. Now, what happens here? Okay, I'm going to give you the trade-off. If you're trading that way, is that normally from the peak of a move, let's say in this case it's 63.03, all the way back to the mid-band 62.80 is usually 20 ticks. All right, so for some traders that's a lot to give. Yeah, so the trade-off is paying more commissions because you're getting in and out, you're paying your broker more with commissions. However, in terms of the length of the trade, normally the distance between a swing and the mid-band is about 20 ticks. Now, in the context of a 200 tick run or a 300 or 400 tick run, 20 ticks is really nothing. Yeah. All right. Good. Does everybody get the feel for this? You want to do a couple on your own where I show them and you call them out? Let's advance this chart. Everybody ready for that? You think you're ready? All right. I'm going to clean this chart up. Let me clean all the drawing stuff out. Is everybody clear? If everybody's clear on what I've shown so far, I'm going to clean this up and move forward on the same chart with one more thing here I want to show. Okay. Yeah, 20 tick pullback on oil at $10 a tick is $200. Yeah. So in most cases you're better off in locking down your profit at the trail stops and then re-entering on a retrace. Yeah, on oil definitely. Now I'm going to advance this chart a little bit more, and if you see a trade, we will type in the letter T. If we think we see a trend change, we'll type in a TC. Ready? Let's do it together. Here we go. Remember, if you think you see a trade, you will type in a T. If you think you're seeing a trend change, you will type in a TC. Here we go. Okay, we're still looking at crude oil. Same morning. Now we're at 8:06 in the morning, okay? Let's advance the chart. 8:10 a.m. Pacific. Blow these bars up a little bit bigger. There we go. Remember, if you see a trade T, if you see what you think is a trend change, TC. $8.12. Okay, I'm going to stop it there. Now you have the benefit of hindsight because you've seen all the bars that occurred between 8 and 8:23. But what was interesting to see is the reaction of all the different traders, everybody here this morning, pretending like we were looking at it in real time, because as the reason I do these exercises is that in real time you don't see, you're just seeing what we're doing here. Bars are just coming at you, right? Bars are coming at you, and you have to make a decision on the fly in real time on what you're going to do. Now, when these bars formed right here, we got a slew to hear from the team of both T's and TC's. Now, I'm going to advance the chart, and you tell me whether this was a T or a TC, notwithstanding what you typed in before. Okay? By the way, and some of you typed in a T right here, and that is correct. There was another region box set up right at the midband right there. So many of you typed in a T when these bars formed. And you can see that, of course, the uptrend continued here. So yeah, this is let me cause you to look at this again in a different way. Let me ask this question. Why is this area right here, the price action right here, why is this not a trend change? What didn't happen here that should have happened with a trend change? If this was a legitimate trend change from up to down, what should have happened? Right in here. Let me help you. Right in here. What should have happened if this was going to be a legitimate trend change? Here, I'll help you. Let me put it a different way. What should have broken here to make it a downtrend? That never broke. Did this price action ever come down through here? No. It was never broken. That support level was really never broken. Right? Yeah, look, all I can tell you is, do you think it's a legitimate case to say, well, Charles, here you have A, based on what you said before, here you have B, here you have C. Yeah, I would agree with that. Now, is that constituted? Was there follow through on the trend change? Let me put it a different way. Was there any follow through to the trend change to legitimatize it so that you could actually now start trading the short side? The best way to deal with it would have been this. Let's say that you're not a phantom taking person. And a lot of you are not, I'm not going to put words in your mouth, but I've asked this question scores of times, and you say, well, Charles, when I get red bars below that mid band, even in an uptrend, I have a hard time taking phantom trades. And that's cool. I understand that. However, the proper way to deal with this, if you are in a state of confusion, whether you're going up, down, or sideways, is to put the region box right here. This takes all that off the table. In fact, furthermore, I would submit to you that you could let this box go either way. Right? At the time it formed, with the background color it had, with the price action you were getting here, not certain whether it was going to go down and break this level or not, these yellow bars could have been boxed in with a region box and traded either way. That's the proper way to deal with that area. Even if you missed the phantom, and this was creating some uncertainty as to the trend direction, and you would have been filled long on the close of that bar right there. Okay, good. Everybody see that? Well, if it was a true, not so much the mid-band, Chuck, I'd say more, from my view on this, is that when this higher swing held here, look at it, if you start counting from over here, you had 1, 2, 3. Now you're getting now you can make the case that you have a third point higher here. 1, 2, 3, 4. Now you're starting to go back up. See it? Now, if the opposite had happened, if it came up here, kissed and rolled, and broke and started heading down here, now the background would have turned red and we'd be trading the short side. Good. Good. That was good. Everybody did good on that one. Final questions. Don't overanalyze this. I don't know how it works. This isn't complicated stuff. Okay? Let me see here. True 10 chains if it stands circle around the mid-band. Yeah, this is a mid-band box that you could have put in. Let it go either way in this condition right here. See it? Right before the opaque. Would this have been a long box entry? Yes. Yes. Who was asking that? Paul? Yes. This is what we call the phantom trade, this box right here, Paul. Everybody. This was a long trade here. The way we teach it. So let me attempt to clear up any confusion as to what a phantom box is and why it's considered to still be an uptrend. So here's the way it works. Clearly, we were in an uptrend. There's no question about that. We check the midband, we get along. We check the midband, we get along. Life is good. Okay. Now we get a deeper retracement where it comes through the midband, almost to the outermost band. In the old days, we used to call this a deep bar probe, a red bar probe. We had different names for it. Now we call it a phantom trade right here. Okay? A phantom trade means that we've come deeper than the midband. Sometimes the bars will change to the other color, but this is not necessarily a trend change, and so it's a legitimate buy up to the long side. Okay? However, some people don't like to take that trade. If you're not good at seeing and taking phantom trades, if you feel that they're confusing and you always get stopped out and don't make any money, and the instrument you trade on really, gets choppy in here, and well, then don't take them. we're going to teach and show it, and it might actually be called in the room, but if you're not comfortable taking it, then don't take it. You don't have to take every trade that's called in the live room, right? Okay, good. Let's do a couple more. Let's get off of crude. Let's try something else. What else do we want to see? Anybody like the Russell? You want to get a Russell chart up here? Roosty Bird? Bring up the Roosty Bird! Roosty? Roosty? Okay, hold on. Give me a minute. It's loading up. Hey, quick show of hands. Does anybody trade YM? Does anybody trade YM? Oh, there's a few YM traders in here. Okay, all right. All right. Just wondering. Okay, where are we at here? Get a Russell chart up here. Stand by. Occasionally I'll trade YM, Peter. It really depends on whether it's a morning that she's behaving herself or she's taking her meds, or she's spastic. If she's spastic, and you can usually tell pretty quickly if she's spastic or not. Those algos kick in, and she's flying around like a crazy instrument. I would normally avoid that. Lately with the increase in volatility, William, I've gone back to start looking at ES. Yes, because it used to be that ES was just getting this mind-numbing chop, for like a whole morning and move like 10 ticks the whole day, and I just can't make any money trading that. But now, you know what? ES is moving again. Let me show you this on the Russell from Friday, which was the 6th. Like this. Let me show it to you this way. All right. So the Russell on Friday, would you say the Russell was trending or not trending on Friday? Let me orient you to help you out. Here is midnight Pacific time right here. So this would have been the overnight session, Asian session, right? Here, this is the beginning of the European session right here. Oh, wait a minute. My data's all screwed up. Oh, my goodness. Wait a minute. Hold on here. Here's the overnight session, and then we go from midnight to 8:03. Uh-oh. Can you say corrupt data? That's a problem. All right, we can still deal with this. Let me show you this though. Let me show you this. How could we have known going into this session here? Let's just say from 8 o'clock, because that's all the data we have right now. That this session was going to be choppy. What could we have done before this point here that could have helped us see that we were in a big old range? What could we have done? There's something we could have done before here that would have visually helped us to see that this market is just in a big old range. Draw the support and resistance lines. Good. Yeah, before you even got to this session, couldn't you put some lines right here and here? Sure. You could have done that before the market opened, from the night before. Draw those lines, right? And as long as you stay within those lines, you are in a range. All right, so we got some corrupt data here. Let me see if I can do something later in the morning that would get better. All right, so we're sideways. Yeah, let's do this exercise. I think it'd be fun and good for you. I'm going to advance this chart. And you tell me when you think things are changing. Just type in a C. You don't even have to tell me what you would do. You don't have to call it trade. You don't have to call it a trend change. You just type in a C when you think things are changing from the range bound condition to something else. And I'm going to help you with this here. Ready? All right, hold on. I'll advance the chart like this. Okay, I'm going to start at this point right here. And you type in a C when you think something's changing. And if you think you know what it is, you can type it in too. Like up to down or down to sideways or sideways short, trading shorts or whatever. Just type in a C. I want to see if you can see identify when things are changing in a market. Here we go. Now this is later in the morning. This was 9:30 a.m. Pacific time on Friday on the Russell. All right, here's our lines from the range, right? Okay, here we go. I'm going to advance the chart. I'm going to do this fairly quickly. Okay, here we are at 10 o'clock. Okay, here we are at 10:30. At 10:34. All right, I'm going to stop it right there. Now with the benefit of hindsight, when should you have probably typed in a C? Looking at it, let me give you several points. Let me give you several points where maybe you should have thought that things might have been changing. I'm going to give you a point here. Let's call that A. Here's point B. And I'll give you another point C right here. Now you have the benefit of hindsight. We did it together, advancing the bars as if we were in real time. But now looking at it, A, B, or C. A, B, or C. That things were starting to change. C. Why C? Why were things starting to change with point C? With each successive swing, were we getting back up? Let me put it in a different way. With each time that you got these upswings, were we getting up to here or taking it out? No. Were you getting up to here or taking it out? No. In fact, you could go so far as to say that you could have started drawing a downtrending line channel that would look like this. The bottom of the channel would look something like this. So certainly by the time you got to point C, it would be pretty clear that the momentum to the upside was coming out of the market and she was about to break down. Now when you got that confirmation is when you got points, these points right here. Right here, which you can make the case was a check of the support level one more time, and I would agree with that. But then how about that one right there? In fact, would you say that this is a legitimate short trade right here? Do you have 3 conditions? One, two, three. Is that the third one? 1, 2, 3. Short. Now, if you missed that short, where was the other spot to get in? Where was another spot to get in short if you missed this box right here? Is there another place that you could have taken a short trade? Everybody see it? I'll help you out. I'll put my cursor around where it is. All right, here's where it is right here. Here's our thrust. Here's our retrace. Now, I know a lot of you have trouble taking shallow retracements, but it did break the stealth line and it did break line 2. That's our 2 criteria of a retracement. 1040 right in here. That's right. This is your second spot to get short. Now, look at what this short turned into. There was your resolution of the market right there. The thing chopped around all morning, chopping around, and then finally at 10:40 a.m. Pacific time, the thing sells off 200 ticks like a big dog. Good. Let's do another one. Some of you trade YM. Let's get YM. I want to do, let's see, if I get 10 minutes. Let's quickly get gold. Let's try a gold, and maybe I can squeak a Weimer in there. Let's see, let's get a gold chart up here. Do any of you trade, quick show of hands, anybody trade gold? Any gold traders in here this morning? Gold traderoos? Just type in a yes or GC or whatever if you trade gold. Gold traders? Show of hands. You know, some days gold is, it's like any market. You know, some days gold's choppy. Some days gold is smooth and runs. You know, sometimes gold's better than the equities. We had some good moves on Friday. Was it Friday? Hey, let me ask you a question here. Let me show you something on gold real quick. This is some pretty good trades on gold, huh? Look at here. You had a big sell-off. Short. Came back up. Look at this big long trade here. Comes all the way up. Swings. Breaks. Here you had a big sell-off. What do you think? Everybody trade this? This would have been the pre-market session on gold. No. All right, I'm tricking you. What happened? Look at the shotgun here. Let me put it to you this way. Here is 529 right here. And here is 531. So this all happened in less than 2 minutes. That's probably, I'm guessing, at least 100, maybe 200 bars. Yeah, what was this? Why was this shotgun of 200 bars on gold? What the heck? What is that? Could you have traded this? Okay, here's 529. 529. In fact, all these happened in a minute. And then all these happened in a minute. Here's 530. Here's the beginning of 530. That was non-farm payroll. That's right. That's right. Non-farm payroll. What do we say on non-farm payroll? You got to stay out. You got to stay out for at least a minute or two or 5 or longer until the market settles down. Yeah, this is not tradable. Absolutely not. This right here alone is probably 100 bars in a minute. And this one over here is probably 150 bars, or who knows how many bars in a minute. Yeah, you don't want to get in front of this freight train. You don't know where you're going to get filled, and you don't know how you're going to get out once it's shotgunning like that. It's just, you know. In fact, if you're trading in an evaluation account for, you know, or a combine or something, they actually don't let you trade those. Yeah, this run up was in a couple of seconds, Chuck. That's right. That's exactly what I'm trying to say. This right here was all within a couple of seconds. Yeah, you can't, just a word of caution, you don't want to really trade non-farm payroll because it is a wild, woolly beast. All right, so let's follow on gold to what happened after non-farm payroll, and you tell me when you think you see a trade by typing in a T. Those are algorithms. Those are news bots, William. The big financial institutions, they have news bots. News bots are algorithms that read what the news is and within a matter of seconds trade it by shotgunning into various markets. So it's news bots. Yeah, that's what those are. All right, so let's do this. Let's do a little exercise together. Let's advance the chart after non-farm payroll, and you signify. You don't have to say what direction you're going to trade, but you type in a T when you think you see a trade set up. Here we go. Gold after non-farm payroll. You type in a T when you think it's time to jump in and start trading it, and you're ready to take a trade. You don't have to say what trade you're going to take. Just type in a T when you think you're ready to take a trade. Here we go. Okay, we're at 531. $5.34. 536. Blow up the bars here, help you out a little bit. 537. So you're 7 minutes into non-farm payroll on Friday morning. 7 minutes in. Blow the bars up a little bit for you. Come on, chart. She's not cooperating. That's all right. Oops. All right, let me stop it there. All right, very interesting. Our responses from the team here this morning in our little trade exercise was really mixed. Let me give you a feedback of what came in as terms of trade answers. Some of you typed in a T for some reason when market did this spike right here. I don't know if I would really consider that to be a trade, mainly because we're still within the 5-minute window and all this really did was just spike up to the top of its current range and get a double top up here. I don't really know if you had enough time to draw. I don't really see a box here at the mid band. What I'm telling you is that I still see a lot of spikiness as a result of the news, and the market's trying to figure out, gold's trying to figure out what direction it wants to go. Now, many of you typed in a T when these bars formed right here. I would say absolutely yes, this is a legitimate mid-band box. Perfect definition, tight cluster formation of bars right at the mid-band. You're just coming off the news. You could have let it go either way. The way that this was being drawn at the time, it could have very well spiked up like that, or it could have very well spiked down like this. If you had drawn it like I show it, you would have been filled short on the close of one of these bars right here. Now, if you missed that, some of you typed in a T. Okay, so you could have taken it either way. Okay, so let me show the thrust. So here's the actual thrust down. We change the background to red. The resolution of this is down. Some of you typed in a T when this happened, and you said short. Good. This was the retracement you could have taken if you missed this initial thrust. And that would have been at 544. So now you're actually 14 minutes into payroll. So you had two trades, in my opinion. You had an entry here, box, mid-band region box, letting it go trade either way. You got filled short. And if you missed the initial thrust, the secondary entry was right here. Oh, the retracement rule. Okay, so in terms of size and location of retracements, we think of it kind of like a batter's box, if you will, that looks like this. If you were to go around the mid band A shallow retracement part of the retracement is here, and in the case of a short, you need to pierce through the stealth line and line 2. Stealth line, which is the red snaky line right here, has to be pierced, and line 2, which is the thin line right here. If it pierces up through that enters the shallow retracement zone and is considered a legitimate short trade in a downtrend. The middle part of a retracement is always located at or around the midband. This is our ideal trades. Everybody loves these trades. I love these trades. That's my bread and butter. I trade that every day. A deeper trade is going to take you above, in the case of a downtrend, above the midband, and occasionally the bars might turn the other color, like blue. Shallow retracement, midband retracement, deep retracement. And we all have seen that the deepest of deep retracements is what in a trend? What's that called at the outermost band? Well, we showed it like 4 times today. What's that called out there that some people don't like? You're in a downtrend and it comes all the way up here. What's it called? What's that called? If you hear it in the room, so you know what it's called. Phantom trade, right? Phantom trade. Good. All right, so when you're in a trend, this is the depth of retracements you can be looking at. All right, let's do one more. I am out of time, but let's do one more. Let's do one more and then we'll wrap, okay? Let's do one more. And you tell me when you see another trade set up by typing in a T on gold. We're still following up on Friday morning after non-farm payroll. Here we go. Okay, here's the secondary entry we looked at. Here's the follow-on from what happened. Excuse me, 5:45 Pacific. 5:46. But let me stop right here. This is not a trade, people. Okay, please don't take this as rude. I'm not being short or rude with anybody here, but I need to pause and stop it right here. This is not a trade. You are already in the trade from here. The trade entry is here. You are in the middle of a thrust down. This is a downtrend and you are already short and trailing your stop. This is a trail stop. Here's the stealth in line 2. You would be trailing your stop, trailing your stop, trailing your stop, trailing your stop. We never, ever, ever take a trade on a thrust move. We are in a thrust. No, not. Trade was here. Okay, so retract your T's. Let's start over. Here we go. Starting over. We all know that now, okay? We'll give you one mulligan for that one. Here we go. Okay, there it's a thrust. Blow up the bars so you can see them. Nice big juicy bars. Okay, now we're at 5:48 going into 5:49 a.m. Pacific time. We're 19 minutes after non-farm payroll. All right, let me stop it there. Let me help you out a little bit here, okay? So here we see we had the short secondary entry. We know that. And we got stopped out of that trade right here. This is where the short stopped out. Now, you see why you didn't want to short down here on the thrust? Look how it comes all the way back to the midband. This would have been a full stop out if you're shorting here. Now, look, I know why some people think that this is where to get in, because what happens is by the time this thing sells off so much, when it gets down here, you're convinced it's tanking. So you want to get in because you think FOMO, fear of missing out. You think you're going to miss the trade when in fact you are selling the bottom of it. Okay, that's why we don't ever do this. Or if you are, you have to avoid it. If you're always getting stopped out in the market, every time I get in there, Charles, I get stopped out. It's like they know I'm getting short. Well, it's because you're selling the bottom of the move. You have to wait for a retracement. You were already in from up here. You're trailing your stop and you got out here. Now you're looking for re-entry, yes? Now, many of you typed in box it when these bars formed right here. That was correct. That was the trade. In fact, I would submit to you after non-farm payroll, knowing that we have a roller coaster market, you should have let that box trade either way. Now, in this case here, it closed up and you got long on this bar right here. However, at the time it formed, you could have had a be of the belief that it could just continue to sell off like that. Let me go back. No, I wouldn't have boxed it for short. Not 18 minutes into non-farm payroll. No. That you got to let markets trade freely either way. So here's the box forming, and I know why you asked that, Roger. I know why you asked that, because what he's saying is, and what you might be observing is, at the time the box formed, you were in a downtrend and you had a red background. So the question was, should this box have been only for shorts? Now, if you did that, and at the time this drew this, and you believed that it was only going to go short, well, then you missed the long. And that's okay. That happens. I miss trades. Gary misses trades. Everybody misses trades. That's totally okay. What I'm trying to say, though, is on a big non-farm payroll morning where markets are swinging all over the place, you can let these boxes go both ways. If it wasn't for non-farm payroll, I would agree with you, yes. This is clearly a downtrend, and you would have only put down only if it wasn't non-farm payroll. Roller coaster morning. We're not really looking at 3 points on that one, Peter. This one is just looking at a perfect mid-band box on a news day. Yeah. All right. That is a wrap. Turn off the recorder. Thank you for coming, everybody.